Hello and welcome to another episode of the Smaulgld Subscribers Sound Off. And today I have with me a returning guest, Ann Rhenf, and we're going to be talking about inflation, deflation, and the consequences thereof. How you doing today?
Hello, Lewis. Good to be back once again. I think this is the fourth time.
Yes, it is, and your commentary is always well received, so it's great to have you back. So what's on your mind generally before we get into this topic, and why did you select this topic?
It's I when I wrote my last post on gold and the blockchain revisited. When I was writing the post, I kind of stumbled into the history of the Industrial Revolution, and then the things that people like Thomas Malthus witnessed, which was a huge overpopulation boom. So I ended that post by saying that if the Industrial Revolution was a money printed misallocation of capital by the Bank of England, then was the population boom from 1800 to the present, which is roughly from 1 billion people to 7 billion people, also a misallocation of capital. So that kind of led me into trying to look into credit and money and how that affected capital and labor, which are the two main input costs in most people's lives, and how that's affected by inflation and deflation. So capital and labor are intrinsically linked, and they are dependent on the credit or money system that they are working on.
And now, in your first article that you wrote, it caught my eye, the economics of money, credit, capital, and labor. And then, it was very curious for me, it said the rise of Bitcoin and the fall of machines. How are those connected?
It's inflation that that creates a bubble in capital and debases labor, whereas deflation creates a bubble in labor and capital depreciates against it. So this is the basic crux of my post, and how inflation and deflation work differently upon society. So if we start with deflation, I described roughly from 500 BC to 500 AD, and this kind of encompassed the Persian civilization, the Athenian, the Macedonian, and the Roman. And these were when we were discussing the money, gold and silver, it's that these civilizations do not rise by accident, but they rise because of Thiers' law, which basically states that it's the most purest and most honest money that comes to the fore. So I also started the post with a quote from a book, The Inner Secrets of the Elites, which posits that, well, not posits, but I'm starting to get more of the idea now that it's the secret technology within the purity and the sizing of money is how these empires rise. And it's on the flip side, on the debasement of the currencies that once made these civilizations great, is how they collapse into the dustbin of history.
Now, you have, on Thiers' law, you mentioned the Persian daric, which was gold base, the Greek silver base, tetradrachma, Macedonian stater, which was silver, and the famous Roman denarius, which is silver. And everyone knows the story about the decline and fall of the Roman Empire, and you can almost track it by decade by how the currency was debased. They originally had 98% silver in the denarius, and it went down. How does that tie into, we'd have to say that the rise of, in recent decades, is the dollar. Is that a result of the law of the free markets and rise Of a civilization that had the purest, most trusted, most desired, most honest international money?
At the end of the First World War, it was. So this is, or the start of the Second World War. But at the end of the First World War, America was the undisputed hegemon, really. So it that was its peak, is when it assumed really world currency status. And obviously, once this is something else I discussed. Once you have a world reserve currency, then you are effectively subsidizing other people's trade. So you are subsidizing free trade, and you are effectively forced to run a trade deficit, which is something else quite interesting that comes out of a world reserve currency status.
Well,
But if you,
hold
yeah,
on. When you have a reserve currency status, I get that, and you run the deficit. If you don't have a Bretton Woods style agreement, let's just say you have a classical gold standard, is that a problem?
yeah, it is in a perverse way, because now your money becomes your biggest selling point. So now that kind of incentivizes for you to build industries on top of your money, such as banks, for example.
Right.
And then once banks are established and they start fractional reserve lending, then that the domestic population is corrupted.
Okay,
So
but
that
that's an indirect problem with it. But under the Bretton Woods standard, where you had the U.S. dollar as a reserve currency, under which central banks that were signatory to those agreements could take their dollars and exchange them for gold at the U.S. Treasury, but wasn't it destined to fail from the start? Because if the U.S. was to run deficits, that would mean the world would acquire dollars, and by definition, you would think they would come and ask to have them redeemed for gold, thereby depleting the gold that the U.S. had built up and causing what happened. What Nixon did was to close the gold window.
Yeah, well, that's exactly what happened. And to be honest, the dollar is an unique world reserve currency. That it wasn't. It was pegged to gold, but there wasn't any gold in circulation, really.
Right.
So the petrodollar has been, or the Bretton Woods dollar was gold in name only. But anyway, so we got to the end of the Roman denarius. So they tried to substitute denarius with the Antoninus in roughly from 300 AD on, and obviously that led to Gresham's law, which is the Romans hoarded the denarius and they circulated this Antoninus, which led to the collapse of the Roman Empire. So after Rome, then we have this 1,000 years of feudalism over Western Europe, and which I discuss in my post, was there was a shortage of money in Europe following the fall of Rome, which I was just speculating and not having researched it much further. I was thinking that the money moved, towards Eastern trade, and I think China was ascendant in the East from about 500 to 1500 AD. So there were shortages of money in Europe that forced then the development of going back to an isolated barter system. So this is through barter ledgers and this split tally ledger system, which I discuss. I haven't discussed it a lot in the post, but I think I come back to it a few times, which is essentially distributed ledger technology and the forerunner of Bitcoin in its modern form. But this enabled highly isolationist, because this ledger is only split between two persons. It's simply a stick which you notch with debt owed or credit due, and then you split the tally down the middle, so that both parties to the contract have an exact copy, and it can only be verified when both sides of the tally are brought together. And this was used as evidence in medieval courts, and it was accepted in the feudal legal system.
So it sounds like these sticks, in a sense, are in and of themselves smart contracts because they're self-validating. You can only put the two pieces together, and you can't print extra of them. They're either you have the two sticks or you don't.
Exactly, which made counterparties nearly for 1,000 years in Europe useless. So,
This was your money with somebody else.
Yeah, but
and
this
nobody
is your
else.
yeah, exactly. It's your debt or your credit with one other person. So it's a bilateral trade mechanism. So unlike money, which can be circulated amongst millions or thousands or hundreds or thousands of people, this split tally ledger is distinct between two persons. So it means that it was a far more isolationist economy than, say, the Roman Empire or any other economy exchanging with money, because you can't easily. Well, that ledger is useless to anybody except those two people.
Right.
So
and this is around 1300, would you say?
Well, no. The split tally ledger itself goes back to prehistoric times, so it's as old as money. So,
okay.
You either in an exchanging economy, you can either have money, which is nearly universally being gold and silver,
right,
or you can have substitutes, and which can be shells or feathers or salt or nails But in medieval Europe, it just happened that it was these split tally ledger sticks, so that basically put exchanging parties on an equal footing, equal under the law. So there was really no counterparty to try and screw the other person, which, in my opinion, is, and I've thought about this, many hours, why after Rome there was never an unifying empire or new Rome, for 1,000 years, because there was really nothing until the Renaissance and Italian capitalism, which came out of northern Italy.
Right, the introduction of modern banking.
Yes, but also at the same time, what you find is the dollars of the Middle Ages in northern Italy. So again, the greatness of the Venetians and the
Florentines, yep.
Yeah, Florentines. That was due to how good their money was. So you had the Venetian ducat, the Florentine florin, and the sequin. So these interestingly were gold. So as we've gone, we talked about the Persian Daric, which was mostly gold, but then you go to the Greek civilizations, and both the Athenian tetradrachm and the Macedonian stater were silver, as was the Roman denarius. But these dollars of the Middle Ages that came out of northern Italy were gold, and I think they were modelled on the Byzantine.
The soldus.
Was it the soldus? Yeah.
Soldius, yeah.
Yeah. So these people borrowed technologies, and I'm still not quite sure how this happens, but for some reason, these gold and silversmiths are able to do something that just makes these coins great, and it's this that builds up the trade and builds up the civilization and the building of infrastructure and ports, and then you're talking about architecture and literature and science and music, and it's all to do with the money every time.
Right.
If you look through history, and when civilizations become great, and then when they turn into empires and start to parasite themselves off the trading people, and they start debasing the money, and this is when the empires collapse.
And I got a quick question, not to derail you, but just to bring this into context. I think the two empires today are the United States and more recently the Chinese Empire. And I would argue that both of them are now approaching a peak debt.
Yeah, but what you also seem to find is that there's an quickening in the pace of reserve currencies. The British Empire only lasted roughly 100 years, and America's barely lasted 100 years now. Whereas, Rome, for example, lasted 500 years. The Spanish silver dollar, which was another one I was just about to get to, which was arguably the greatest world reserve currency of history, that lasted roughly 300 years.
Yep.
But it seems that the more you debase the money and the more that central banking and credit come to play in the gold standard in the last 200-300 years, is when there's the frequency of world currency starts to increase. So every empire seems to be getting weaker, or bigger and weaker, if you understand what I mean.
But doesn't, in the past, when we've had these declines, either there's been another empire to take its place, or in the case of the Roman Empire, none. And you were pushed back to tally sticks and barter. So where do you think we are with the US and China? Because right now there's nothing on the horizon that would say there's another empire out there that isn't debt-based. Are we going to end up back on tally sticks, or the modern equivalent, maybe Bitcoin?
This is what I feel anyway. I think you need to go back to when we go back to this northern Italian capitalism, for example, is when you see the first double entry bookkeeping ledgers, which is it was a revolutionizing technology of the 14th or 15th century.
Modern accounting, right? Is that what
modern
that is?
accounting, this is, yeah. So you have the precious metals in the bank vaults, but they are then leveraged with paper money or bills of exchange, and so there's a blurring of lines between credit and money. So you can run an international world reserve currency standard on, say, the Venetian ducats, say, but you can start printing money domestically to your populations and start a fractional reserve boom bust cycle, while also having a gold or silver international standard. So this is why when I talk about the trade deficit, it's this this natural monopoly of money that this Tiers law forces. People only really want to hold one currency if they can. So if one currency is better than the rest, everybody's going to hoard the same currency.
Right.
And that's going to stimulate trade with the currency issuers, and then you start to have this incentive to build or to financialize the world reserve currency status from the people that issue it.
Right.
So this, it's civilizations rise on greatness, but once they have this reserve currency status, then they become ripe to be corrupted domestically anyway.
It's just a cycle, though, isn't it?
Yeah, it's a cycle, and it's a cycle based on these gold and silversmiths who are able. I've got a quick section on the Spanish silver dollar, and that I have a diagram of it. So you have the anti-clipping marks outside the coin, and it's 38 millimeters diameter and 15 1537 to 1869 Spanish silver dollar. Millions of coins are minted, spreading through Spain, the Americas, and Southeast Asia. The consistent weight and purity sets the world standard. So this intrigues me, you see, because it's like it comes out of nowhere. We've discussed the Greek and the Roman. We discussed the Spanish silver dollar, and then in the 19th century, then after the Bank of England started, sterling became the world reserve currency of the 19th century, which again was silver. So you see a theme in Europe really of silver, except Italy.
But there is a difference between the Spanish silver dollar, the Roman denarius, and the UK sterling, because the Spanish silver dollar was selected, I think, voluntarily, because it doesn't say a fiat number on it. It doesn't say that this is worth 12 pesetas, 15 pesetas. It basically is being exchanged because it is a consistent weight and purity, as you say. Whereas the denarius, they tried to say, the denarius issued in 45 BC at 98% silver was still a denarius in 210 AD when it was 5% silver. And I think the pound sterling was the same way. It represented a weight of sterling silver. But over time, just like they did with the US coins, they were supposed to have the quarter, a dime, and a half dollar were standard weights, and they stamped a fiat number on them, but then they removed the silver, and they still stamped the same value on them. So I think that's a very curious thing about the Spanish silver dollar, is it's a standard weight. It's not because someone says it's worth something, it's because it is worth something, because it is a standard amount of weight of silver and purity of silver.
Yeah, and it
trusted
was
as such.
the best coin for 300 years. So yeah, I need to do more research on sterling, to be honest with you. I know that the system before 1971 was pounds, shillings, and pence, and they were
Right.
240 pence in a pound. But yeah, but obviously, sterling must have been devalued less than every other currency, because I know the England had their navy, but still, I fail to see how sterling could not have risen to prominence if I think sterling's 92% silver, isn't it?
Right. Sterling silver is 92.5, but if you look at what happened with England, the same thing. They removed the silver content from the coinage, and they still called it pence and whatever they called it in the past. And then when they switched out of the florins and the shillings and that system, then there was no silver in the coins at all. But by then, they weren't the reserve currency either.
Yeah, exactly. But I've discussed in the past post and in this one, especially with regards to the Reformation, it's when these banks start funding these monarchs, and specifically funding Protestantism to split, what was previously a unified Catholic Europe. So it's divide and conquer of religion, which brings then with it this divine right of kings and this absolutist monarchism that is a consequence of Protestantism. So these monarchs then claim this monopoly law over the law. So this starts taxation and inflation really on a national scale, because these monarchs they invent basically the nation-state monarchy, which hadn't really existed under feudalism, which was, as I've said, the bilateral debt and credit between, say, local lord and local serf, but it wasn't a law system that scaled nationally. It was a very localized system of property ownership and property rentership, which changed under feudalism, in the monarchy. Sorry. So, as these Protestant monarchs then start taking power and start extracting the populace, then the money lenders come in and ask for this monopoly over money.
Control of the money supply, which in the Spanish real, the Spanish silver dollar, the only control they had was they issued it, but they didn't issue it other than in the form that had the purity and the weight. Whereas these types of systems,
central banking is a derivative of Protestantism, you see,
Yeah.
not of Catholicism. So this is how the Spanish Empire was different from the Protestant, mostly Dutch and English empires that came after. But it's, Sweden's the first country where you see this national bank. That was under a Protestant monarch too, so that was in 1668. But
the Riksbank, right?
the Riksbank,
Yep.
Sveriges Riksbank. But the big one, that I discuss in my post is you have the Glorious Revolution of 1688 and William III overthrows. I think it was James VII was a Catholic. So Protestantism comes back to England with a Glorious Revolution, and then 6 years later we have this Bank of England, which, when you think of it, there are certain advantages for monarchs to give a central bank a monopoly issue. That is to finance monarchs in their navies and their standing armies for, domestic suppression and for conquering new lands overseas. And you can also see the benefit for moneylenders in that once they have a national monopoly over the currency, they can effectively extract the common people through the king.
Yep.
So it's a parasitic brotherhood, central banks, which develops lockstep between monarchs and bankers. And so once we have this is no coincidence, by the way, but within 100 years or 50 years of the establishment of the Bank of England, we have the beginnings of the Industrial Revolution in England. The Industrial Revolution originated in England and nowhere else. And this, I argue, is because of the first real national bank monopoly, which was the Bank of England. It is also, if you look at my post, is when England's population from 1800 to 1900, just from 1100 to 1800, the population of England had been between 1 and about 8 million. And from 1800 to 1900, England's population shot up from under 10 million to over 30 million. So it looks like a hockey stick,
Right.
which, triggered my elements, and trying to figure out why this happened. Also in this time, obviously, you have the Industrial Revolution and the rise of the machines. So when you studying money, I started to wonder why this all happened together, because this Industrial Revolution, the steam technology was known to the Greeks and the Romans, but they never had an Industrial Revolution, even though they had developed some kind of railways, and they knew the basics of steam technology. But the thing I come back to with regards to that is that labor, they had slaves. Labor was cheap, so they didn't have really any reason to create this Industrial Revolution, which then brought me back to so why did this happen in England? And what I come back to is this fractional reserve banking, which drives the centralization of property. So when the banker prints the money and he exchanges it with other people who consider it the same as money, he gets to buy up the economy for free, basically. So money lenders become large landowners, and then they can direct with their finances the mode of production from then on, which is centralization, less owners and more workers. So we have the rise of factories and we have the rise of machines. which is basically there to feed this population boom of England during the 19th century.
Now, you mentioned something that needs to be underscored. I had never realized this. You said the Central Bank of England facilitated the Industrial Revolution. And I know Germany went through an Industrial Revolution, but they did not do it for 50, 80, 100 years later. And that's about the time, I think in the 1870s, when you had the German Reichsbank finally established for Germany. And
Yes,
it
yes,
seems like they coincide.
yeah, they always do. You have a look at France, for example, and so France turned into an industrial economy during the Napoleonic Wars, such as England. But they had the Banque de France from 1800 on.
There
You know, after after the debacle of John Law and Louis XIV, and then they chopped Louis XVI's head off. And then, after Napoleon came to power, they brought the Banque de France in 1800. So,
it is in your article. Here it is. Yes, Banque de France,
is,
Fund of Napoleon Wars, and German Reichsbank from 1876. Yes.
Yeah, it was Bismarck who unified Germany into the German Empire. So, people hate on Germany, but Germany was actually late to the Imperial Party. They were
late to Imperial and late to Industrial. You're right.
Yeah, they were. So the Reichsbank wasn't established until 1886. So
there you go.
Yeah. But Germany caught up pretty fast with France and England so much that they had to be smacked down by the start of the 20th century, which is what the First World War was all about.
Well, then that leads us to the founding of the Fed.
The Federal Reserve, yes. Very, very quirky bank.
In 1913.
Yeah, so I've said in past posts that I find it highly coincidental that the Federal Reserve was instituted in 1913, just a year before the Great War, as if the US knew that they were about to join a war. But yeah, so I think I've linked into the article to the Creature of Jekyll Island, just so people know, how shady and underhanded these bankers were in setting this secret meeting and then getting it voted through the Congress on, I think it was the 23rd of
Christmas
December.
Eve or something like that, right?
Yeah.
No one was paying attention, yeah.
Nobody was paying attention, and then they sneaked through this monstrosity that basically destroyed America over the next, 30 years. So, they joined the war late to aid England and France against Germany, and as I've said, that the point of the First World War was to really destroy Germany. But they also removed the Romanovs in Russia, so the communists took over in Russia.
1917, right? Just a few years later, yeah.
17. The German Kaiser was, I think he abdicated on the Hungarian Empire. The Austrian Habsburgs were deposed. So democracy fell. It was a century earlier that democracy started in a republicanism in America with the American Revolution and the French Revolution, but it wasn't until the end of World War I that monarchy, became subsumed by banking and was dismantled and replaced with this democratic system. So it spanned from communism in the East, but the communists were always looking for a way into Europe, and they were, in the post-World War I, there was a revolutionary spirit. So Italy, Germany and Spain were teetering, and the communism then. So this kind of drove the nationalist and fascist counter movements of Mussolini, Hitler, and Franco. But again, if you look at the end at the Second World War, it was the powers of international capitalism and communism, which I argue are basically controlled opposition and two sides of the same coin, so to speak. They defeated nationalism, and so Europe was basically divided into the USSR, NATO, and then America pulling the strings, and they had the Bretton Woods system installed in 1944 at the end of the Second World War, which effectively, well, was America's world reserve currency status.
Well, hold on. That was a very interesting thing you said. That the capitalist communist controlled opposition to crowd out nationalism. Isn't that what we had maybe in a sense before Trump with U.S. and China?
Yes, I think, but everybody talks about Trump and Hitler, and I think that there's not really a better comparison for our times now. If you look at 1920s, the Roaring Twenties, for example, you had a lot of money printing, moral debasement, you had hyperinflation in Weimar, rampant prostitution, and porn, and it was really a decadent age. And then when you print money and you create these conditions, then you create the strong man to come in and try to clean it up. So if you look at the parallel between, Hitler came to power in 1934, I think, and we had the war in 1939. But you look at what Trump's doing now, and I think Trump is, they talk about Hitler putting the Rothschilds in the jail and then issuing debt-free currency to fund, the industrialization of Germany, that tried to cut Germany off from the globalist financial system, which is, if you look at it, I think this is what Trump is trying to do now too. So I think there are many parallels between the 1930s and what is happening today, and it's basically down to the money and who is controlling the money. So this question, and I think I did talk about it with you in a previous post, where I said that Trump has a picture of Andrew Jackson up in the White House. Mm-hmm. If that gives you any clues, well, I think that Trump is going to try to do something with the Federal Reserve, because there are many members open there now, and I think he gets to pick two and then another two.
Talking about board members of the Federal Reserve.
I think there's 7 members, isn't there?
Yeah, but he also he publicly, just like he does with Sessions, he mused that Powell should not be raising rates, trying to interfere with their so-called independence.
Yeah, I know, but I think this is a period where Trump and the Fed are going to blame each other for the next financial crash. Mm-hmm. So I think this is all about optics. So I think this is a very interesting time we're going into. Just this really has nothing to do with Bitcoin, but it's this this Federal Reserve system that has strangled America. It created the Roaring Twenties. It engineered the Great Depression. It bilked millions of Americans out of their property through this business boom and bust cycle. So it's destroyed. It's absolutely destroyed America. So I think the Fed is the most important thing we need to be concentrating on in the world, because not only is it America's central bank, but it also has the world reserve currency. So,
but do you think that Trump, like Jackson, Trump has said on many occasions when, for example, they struck down his travel ban, they tell him that he can't rescind DACA. Fed does something he doesn't like. Right after the founding of America, you had the Supreme Court assert its dominance, so to speak, with judicial review. But that had been, quote, well established by John Marshall early on. But John Marshall was still around when, I think it was, there was a ruling about what to do with the Indians, I believe. And John Marshall issued a ruling, and Jackson's response was, well, that's his opinion, and I have mine, and let's see if he can enforce his. Are you suggesting that Trump might pull something like that, either with respect to the Fed or with respect to one of these judicial decisions that he doesn't like?
Well, if you look at the history of central banks, they tend to have charters, so that I think the first one had 10 years, which Jefferson knocked out, and then
Right.
I think the Second National Bank got a 20-year charter, which Jackson knocked out. So
Correct.
I think, from what I'm reading and what I'm thinking at the moment, that something is going to happen with the Federal Reserve, but I can't tell you what. I don't know if they're thinking of going back to the gold standard, which would destroy every economy on earth today. If we went back to a gold standard, then warfare and welfare and the warfare and welfare industrial state would collapse nearly overnight because they could no longer print money and run the deficits. So when people talk of the reset, I think they are being highly naive. But I'm getting increasingly interested in what's happening between Trump and the Fed, and I think this is going to be one of the most important things to watch going forward the next few months and maybe a few years.
So do you think the Fed, between now and the end of the year, we're talking, today is August 4th, 2018, the Fed just didn't raise interest rates at the last meeting, but the pundits are saying that we're going to raise rates at the next meeting and one more by the end of the year. Do you think they'll go ahead and do that?
I think they have to. I think they backed themselves into the corner, also they're going to have to just hike until something breaks.
And you think they will do that, and Trump will stand by idly as something breaks, pushes the country into a recession as a result, maybe of raising rates? You have always said that the Fed always raises rates too much and breaks it. Isn't that correct?
The Fed is independent, Lewis. The Fed can do what it wants. But you see what I mean? To maintain their independence, if Trump says no hikes, they are going to have to hike.
Correct.
So they trigger the next recession, and then Trump can just lie back and say, "You created all this.
But
now I'm going to clear it up."
But what I'm saying is, you mentioned Andrew Jackson. I don't know what he said exactly to Marshall, but his point was, and same with the bank, that he was considering himself as, look, I'm the president. I'm an equal branch, if not more equal, than the judiciary. And the central bank, the Fed, isn't even at the same level, supposedly. There's three branches of government. It's not like what Alan Greenspan said, we could do whatever we want. In theory, the Fed is a creation of Congress and is not superior to the president, the Congress, and the all other central banks in the world are not set up this way. They're all set up as a part of the Treasury. So the the executive,
they're nationalized basically, but
correct.
This one is still private, and sells its currency to the Treasury issues bonds, and then the Federal Reserve gives them currency back for the bonds.
Yeah, it's crazy. And then they use they use independent banks to be their distributors, like Goldman Sachs, JP Morgan. So the Treasury doesn't even sell the bonds; they use intermediaries. So
the thing about the Fed is it's more a fabrication than the others. The others evolved, I would say, more naturally. For example, the Bank of England, took a century really from 1694 to the 1800s before the currency manipulation started having profound effects on the economy of Britain. But it evolved over a century, whereas the Federal Reserve was arranged in at Jekyll Island in 1907 after the panic of 1907.
Right.
So they didn't have long to set it up, and I've always been a bit fascinated by the setup of the Federal Reserve with these 12-member banks and its interactions with the Treasury, which under the Constitution it's only the Treasury that's allowed to coin money, not a secondary thing that is neither federal or a reserve.
Well, the only way they get around it is that Congress had to approve it, and they did approve it. And Congress has been doing this for over 100 years, which is devolving itself of power. They created the Fed, and not only did they create the Fed, they've then allowed it to take on more power. I think in the 70s they gave it this full employment mandate. So it's not just creating a central bank; it's giving them more power.
I think a central tenet of America First is with regards to the currency, that they maybe try and scale back this world reserve currency status, because it's destroying America too. The trade deficits, the offshoring of all the manufacturing plant and all that stuff is really hollowed America out. So I think the world reserve currency is more of a curse than a blessing. So it will be very interesting because if Trump takes everything down, then he might get the blame. But I think the next few months and maybe years is now creating the optics to make sure that when the next crisis does strike, that Trump can actually put the blame on the Federal Reserve. Because you've got to understand that every American exchanges in the dollar. So if the dollar turns to shit, then, somebody's going to get the blame. And hardly anybody knows today what the Federal Reserve is and what they've done to our money. But
well, you're right. If Trump takes to Twitter and does the same thing, he makes people famous, people you never heard of. No one knows who the Fed is. Jerome Powell is probably even less known than Janet Yellen. If he starts tweeting about Jerome Powell and raising rates and how it's going to destroy the economy, that is a good example of using the Twitter pulpit.
I think people underestimate the power of the presidency.
Yes.
In what he can do. I know he's supposed to have everything he has from the Congress, but still he can. Obama opened the doors to executive orders, so
right.
They've basically shot their own foot off there.
What's interesting, if the president somehow interfered with the Fed, that's not even a constitutional crisis, I don't think. I'm not sure how that would work.
Well, under the real constitution, it wouldn't. So we're going to have to see, because it's going to be very interesting.
Yeah, I'm just not sure he's going to be that aggressive, but he might be if, indeed, the Fed, like you say, decides it needs to maintain its independence. It wants to raise rates for whatever reason they've calculated twice, and the economy goes from 4% GDP to 1% GDP. Now he's rolling into the 2020 elections in a recession, and he's furious. Richard Nixon actually dragged Arthur Burns into his office before the 1972 election
and put him up against the wall.
And told him, knock it off. And he
Yeah.
did. And Arthur Burns wrote a diary explaining how he thought he was going to be Mr. Independent central banker, and Nixon hired him solely so he would do loose monetary policy. When Burns was talking about raising rates, Nixon told him, knock it off. Now, that never made it as a big deal, and no one knows who the hell Arthur Burns is and that Nixon told him to knock it off. But if Trump were to tell Powell to knock it off, he'd do it, I'm sure, in a very public way.
Yeah, he would. So this is the advantage of this Twitter account Trump has got, in that he can go direct to his base. Yeah, the thing is just amazing. I was reading something the other day that Putin doesn't even have a smartphone or anything. He types everything out on an old analog typewriter so that there's nothing online. And Trump's got, a special iPhone for his Twitter account.
Right.
So I think, Trump's doing things that have really never been done, and it's in the most important country, talking about the modern financial system and global capitalism, then the US is the most important country on earth, and you have your president using Twitter.
What's interesting is the reason people are underestimating Trump is there is, like you say, he's doing things for the first time, which means they don't have a playbook on how to counteract things that have been done for the first time. So they're off. They have they're way off balance in trying to deal with them. They don't know how to deal with a tweeting president. That's never happened before.
Well, the most important thing he's done is going after the mainstream media. So this fake news is his most successful thing to date. So he spent the last year and a half basically hassling and hating on CNN, and he's in the process of destroying the trust of the mainstream media, which is step one, and then then I hope he'll get to other steps like cleaning up the FBI and DOJ and then the Fed. But we'll see.
It does seem to be that's where he's headed.
Yeah,
but because the FBI and the CIA are clearly trying to get him.
Well, I think this Trump dossier and the FISA FISA court application and what the FBI and the DOJ have been doing to try and get him impeached. I think this is all going to backfire, and I think this is what he's known all along. So I think he's drawn them all into this bear trap. So I think on many levels Trump is a genius. I think I got the.
I don't disagree, and I mentioned the other day on Twitter to somebody that people underestimate Trump, and their initial reaction is not to analyze that statement. Their initial reaction is to say, "Oh, you're a fascist," or "Oh, you're supporting Trump." I'm observing the fact that people are calling him dumb when he's outsmarting them, and they don't even. The real dumbness in it is they don't even realize it's happening to them.
Yeah,
and that's where I see it as genius, like you do.
Yeah, he's just a master troll.
That's the word. He's trolling, and if you're a troll,
he's trolling. He's trolling everybody.
He's trolling them, but they're right. But they're falling for it. It's not like he's out there making a baboon of himself and he's not getting anything. They don't understand how effective he's been, even though they've been trying to take him down. While they're trying to take him down, he's gotten most of his agenda through, other than the wall.
Yeah, and I think eventually he'll get the wall too.
Yeah, and his popularity is, it's not great, but the point is, you would think with this barrage, he'd be at like 15%.
Well, I think a lot is riding on the midterms at the moment. The Democrats think they might have a second win, but I think they're going to be blown away. So I think, his mandate is going to be concreted after the midterms. So then he can then carry on with, these things that we hope he's going to do. But, either way, now as we can start getting to discuss deflation and Bitcoin, which is, Trump can do he can do some things, but I don't think he can arrest the long-term decline of the dollar and the rest of the world's fiat currencies. So I think, as I discussed with you in my last interview, that this time now is not the battle between money and credit, gold and silver, and banking, but between fiat and Bitcoin. So it's this battle between credit and which credit system is going to be used to create the next gold standard. So this tiers law I've discussed, it still applies to Bitcoin as well. So you for example are seeing it in Venezuela at the moment, where people are hoarding the Bitcoin and spending the shitcoin,
right,
which is the Venezuelan bolivar, which is driving the hyperinflationary collapse of Venezuela. So I think that Bitcoin will spread in the world's poorest countries first, because that's where the store of value is really needed at the moment. But I just feel that that Bitcoin is going to. I think that world reserve currencies are built really on store of value first, and that you can leverage medium of exchange and unit of account purposes later on, such as banking, for example. So I think that the most important thing going for Bitcoin at the moment is its scarcity and this store of value status, which, although it's highly volatile, but that really is at the moment is the function of the mostly unregulated and high liquidity centralized exchanges that exist in most of the world's countries by now. Yeah, so I think these poorest countries are going to need Bitcoin as a store of value first, but that this will eventually spread. I discussed in my post about the start of the internet. Really, it's a child of military intelligence, and they developed cryptography in the Second World War. They also developed a primitive computer, which was then privatized, both the internet and computers, and then you had mass manufactured laptops and smartphones that we have today, and then we have this internet which is built in layers. So I think the next logical step is for a digital currency that isn't issued by banks or central banks to flourish on this digital internet we now have.
What do you mean?
Well, the the infrastructure is that, the internet has decentralized information sharing between parties. It's decentralized trade. I know
Right.
that trade is still managed through Amazon and PayPal, but it's still effectively peer-to-peer trade over the world using the postal services. So the next logical place for disruption is the financial and legal systems, with fiat money and um, digital currency like that being superseded by what I call the reforming of the split tally ledger with Bitcoin, which is distributed ledger
Okay.
technology.
So my question is, how does it happen? Does it happen organically by the people? Does it happen by governments saying so? Or does it happen by, for example, this New York Stock Exchange, Starbucks, Microsoft initiative? How, if it's going to happen?
Well, I've written in past posts that I think it's the millennials that have the least trust in this modern financial and legal system, and that it also happens to be millennials that are the buyers of Bitcoin at the moment.
Mm-hmm.
So I think this is going to develop in the youngest generations who are most, tech savvy when it comes to social media and um, smartphones and laptops than the older people who
So,
still
so
have.
it'll happen organically, though you're saying, not as a result of corporate intervention and not because of government intervention.
Well, I've written a post on Bitcoin Kills Banking where I specifically discuss the on ramps and off ramps from fiat into Bitcoin. So these obviously play a part
Mm-hmm.
in that the only way you can buy Bitcoin today is through a fiat exchange, basically, unless you accept Bitcoin, for your goods and services, which not many people do because it's a highly volatile store of value at the moment. But people still buy Bitcoin with fiat in the hope that it's going to go more up than down. So governments and corporations can decide what they want to happen because, in this era of low interest rates and low profitability of money, that hurts banks, it hurts the net interest margins. It also, with these interest rates starting to go up now, it's starting to hurt corporations who borrowed cheap money to, expand operations, and so they're becoming less profitable now with these rising interest rates and quantitative tightening. So
Hold on.
they need each other.
Doesn't the raising of rates though fend off the inflation and therefore take away some of the attractiveness of a deflationary currency like Bitcoin?
Yeah, that's possibly true, but that's been the same of gold and silver too. If you look at the last financial crisis, for example, the price of gold and silver created going into the crisis, and they've been going down lately, and so has Bitcoin too. So yes, maybe short term, but again, if you're a gold and silver hoarder or if you hoard Bitcoins, you should be thinking a bit more long term than the next, 1 or 2 years. So I've no doubt that once they have hiked the interest rates so far that they trigger the next recession and crisis, that they're going to juice the economy again. So you're probably going to get 4 times the QE you had in 2008.
Right. Yeah.
So then again, gold, silver, and Bitcoin become more, this tiers law kicks in again, and you want to hoard the good money, and then you'll spend the shit money, and so this I think this is the cycle of how things are going to go in the West in this next crisis. So I think that these corporations, I have seen that story yesterday with this, I think it was the back exchange,
Yes.
and this ICE exchange. So it looks to me like the corporations are starting to build the infrastructure that more seamlessly allows more people to buy, store, and possibly sell cryptocurrencies.
Right. And
Which
spend
I
and spend too.
and spend, but I think that there's more of a test case for store of value for Bitcoin at the moment than it is as a payment system.
One of the things they say about store of value that they've all been talking about is it's hard to store and make sure it's not hacked. That's one of the key things that they're talking about.
Yeah,
That the
well,
storage is difficult. It may be a store of value, but it could be stolen very easily.
yeah, but I think that's just a question of the infrastructure, really. The more companies develop wallets, the harder they're gonna come to get hacked. But also there are private companies on Bitcoin building storage wallets. So obviously you're not going to learn everything about Bitcoin from scratch. It's going to take you, maybe quite a few months. First you buy it and then you leave it on your wallet, and if it goes up in value, then you need to invest in a hardware wallet so you can take them offline where they cannot be hacked.
Right.
I'm sure there'll be numerous problems with the infrastructure built, but the point of it is if you can buy Bitcoin through Starbucks or through Microsoft, then you make it easier for the newbies and the normies to at least dip their toes in cryptocurrencies, which takes cryptocurrencies out of circulation and drives up the price.
Mm-hmm.
So, would you like to start discussing deflation? Or
Absolutely. That's what we're leading up to.
so I'll start with a quick definition of deflation. So, unlike inflation, and which is mostly a central bank phenomenon where they print more currency than there is gold and silver in the bank vaults, and therefore the proxy of the goods and services of the rest of the economy. Under deflation, there's a scarcity of currency or money. So that means that there's nobody skimming off the top, and that also means that the purchasing power of currency, there's more economic growth than there is growth in the currency. So this currency becomes deflationary, and then it increases the purchasing power. So saving, I talk about a 5% deflation rate per annum on say £1,000 worth of money. So in 1 year, that £1,000 would be worth £1,050. So
Right.
5% more. Extrapolate that out 10 years, and it would be worth £1,500. So it's increased purchasing power by a half in 10 years. So this is for storing currency, and this is the first stop for this is labor. So this rewards the common man more than anybody else, because everybody needs to produce and then store in currency before they can acquire capital. So because your purchasing power in labor is going up, the value of capital is depreciating against it. So again, if we use that example of a property that's worth £1,000 today, if we're talking about the annual deflation rate of 5% per annum, that property is going to be worth £950 in 1 year. And extrapolated out 10 years, and it will be worth £500. So only half what it is now.
Okay.
So you see that under the system of deflation and scarce money, it's labor that appreciates as capital depreciates. And this is the polar opposite to inflation, where capital inflates and labor depreciates.
So hold on.
Which,
Does that mean then the value of my labor is worth more?
yes, it does.
Okay.
And the value of machines, you understand, is worth less. Or capital, because capital is becoming cheaper. So it reverses the centralization of the means of production. It reverses factories, machines, and it rewards labor. It rewards small local business. It rewards workshops, and it rewards tools really over machines. In that you are not forced to increase your productivity with machines. You can actually invest in labor-intensive, tools, and it changes the whole time preference of society. Really,
Now I'm going to talk about this tonight, because I wrote something on how the minimum wage laws, because you're trying to increase the value of labor, which has been debased, as you would say, through law, how it forces companies to actually build machines to replace people. Under your deflationary explanation that you're saying is this wouldn't happen.
No, and the thing is, because the purchasing power is increasing, that it's more of an incentive to become self-employed, if you understand what I mean. So you're not incentivized to work, for a capitalist or a company. The rising purchasing power of the currency itself means you become more independent over time. So you can start, you can leave. You don't have to work for another person. You can work for yourself, and your net worth is automatically increasing. It also allows you to invest more cheaply in capital and in workshops and property. The depreciation of property then it incentivizes large landowners and people who own a lot of property to dishoard their property because they're being taxed in the currency. If the value of property is coming down 5% every year, then that's basically a tax on landowners. So they are incentivized to dishoard their property,
and
which
produce.
can then. Well, actually not. This is another byproduct of deflation is to lower productivity. So I tell you that your purchasing power increases by not producing. So do you understand what I mean?
I understand that your purchasing power increases if you dishoard property because you don't have to pay for it. But how does it?
Because you're holding the money instead. So the money pays you for doing nothing.
Right. Okay.
Yeah, so it basically eliminates the profit motive, especially in property such as construction. So you can't really build a house to make a profit anymore, because automatically the value of capital is depreciating. So every venture or every property you have loses you money. So you have an incentive to hold as least excess property as you can, because you're losing your net wealth priced in the currency. So that basically
remedies. Would that apply to gold and silver?
Yes, it would, but it depends which reasons you're holding gold and silver for. So I'd class gold and silver in a digital economy working with Bitcoin as probably an intergenerational store of value. I don't think it's going to be circulating in everyday transactions.
Okay.
But as I discussed in my gold post, if Bitcoin goes up against gold, that also incentivizes large gold holders to dishoard their gold and silver stockpiles. So we're talking banks and institutions that have, for the last 500 years, hoarded up all the gold and silver and then built their own ledgers and paper notes and currencies to rig and destroy, the gold standard.
But this hoarding the gold in the olden days would mean that it would go into circulation and people would spend it. What good does it do for people to dishoard gold? Dishoard it into what system? Jewelry?
No, we're talking large centralized gold holders now. If you're like me and you hold gold, right. I've held gold and Bitcoin, and gold hasn't gone up as much as Bitcoin. That doesn't mean I've dishoarded my gold.
Right.
I hoard my gold because it does something that Bitcoin cannot do. So,
but why would you? What benefit would it be for you to dishoard it, and who would you dishoard it to? To
the large centralized hoarders of gold, say people like the Rothschilds. If they can hold Bitcoin instead of the gold, so right. If Bitcoin goes up against gold, they have an incentive then to dishoard their gold, which can then be sold into the open market. Now I know that gold will be losing its value against Bitcoin, but that right. still doesn't mean that people will not hoard gold for a different reason than they're hoarding Bitcoin. It's having a balance of assets, I think. So
why would you want? But I still don't get it. Why would you want to hold gold under your theory if it's going down and being sold?
Well, Bitcoin might collapse.
Okay, for the same reasons
There's
you hold gold today, really, not for it to skyrocket,
Yeah.
but to hedge for
But
insurance.
Yeah, and as
Okay.
it's an intergenerational store of wealth.
Okay.
You look at Bitcoin, and as magnificent and magical Bitcoin is, it's still dependent on electricity and oil.
Correct.
Now, there's a certain possibility that we might lose electricity and oil in certain parts of the world.
Yep.
Under that scenario, Bitcoin becomes useless. So unless you are going to set up a local barter ledger with, your friends and community, then I'm sure there would be an opening for the exchange of precious metals in there too.
Right. I got it. Okay.
So they're physical commodities. So as I say, gold and silver are money, and Bitcoin is credit. They're two different things, and really you should hold both as hedges against each other, really. Plus, it doesn't. I'm not sure it's going to stop the Indians or the Chinese from buying gold, is it, Lewis?
I don't know. I mean, I don't know what they're thinking. I don't know. You see, if in the modern world, the further away we get from gold standards, why do people hold gold? Is the monetary value 100%? Has it been reduced? I talked about this the other night. I'm not sure. Clearly, silver's monetary value has been, by fiat, removed. The question is, in your scenario, if Bitcoin becomes hyper valuable, does that mean that gold has any monetary value? If it's not used as a medium of exchange, but only as a store of value, but then not to be facetious, but then mugs can be a store of value. Anything that is tangible could be considered a store of value, like silver or copper or aluminum.
Yeah, but you have many people with family silver. You have jewelry. There's.
Yes, but that's not money in the same way.
No, I know. Well, it is. It's just in a different form.
Yes,
So,
yes, but not in a form that's exchangeable as a currency. Is my point.
No, I know, but it's possibly that's just a byproduct of the world we're living in.
Correct,
So
but go ahead. But what I was going to say is that you can digitize any asset now. It doesn't have to be gold or silver. You can digitize receivables, oil, copy, whatever it is. It doesn't necessarily have to be something tangible that you can make into a coin to deliver to somebody else, because you can deliver the value through digitizing something and putting the value of that on the blockchain.
Yeah, and if we are talking a digital economy where gold and silver are going to lose their track as money, then people are probably going to turn gold and silver more into stuff like the family silver or jewelry or
right.
And then say, I put in my last post, say if Bitcoin were to collapse tomorrow and we would need to go back to an analog trading system, then that jewelry might be melted down into coins.
Absolutely,
again,
absolutely.
So like I say, gold and silver are eternal, and they can come in many forms. They can be heavy money, heavily monetized, or they can be heavily commoditized, or used as a store of value, or you can use gold and silver anywhere really. And it's very scarce as well. So I'm just bullish on scarce assets. Bitcoin is a scarce digital asset, and gold and silver are scarce physical assets.
Right. Do we have anything else here? So let's wrap up by trying to figure out, not that we're going to figure it out, but over the next 2 years, I think these are critical years for Bitcoin and the whole ecosystem. One of my, I'm not saying I'm married to this idea, but where I see it going is an attempt by the establishment banks, the establishment big corporations, trading platforms, financial institutions, money processors, is to somehow bring at least Bitcoin, and maybe definitely Ripple, there's no two ways about it, That's already in the system. And then what happens? Do we just maintain somewhat of a fiat system with control over Bitcoin, or does Bitcoin actually take the place of, which is I think what you're arguing, of the fiat systems, the debt-based systems, or does this just allow them to carry on even longer?
Well, what taxing and regulating Bitcoin allows you to do is to you have to allow a light touch regulatory apparatus to work, such as what the CFTC. Yeah, I need to make this distinction. At the moment, Bitcoin is regulated as a commodity, and
Right.
apparently Ethereum is the same. And all the rest of the shitcoins, they're going to be regulated as securities.
The ICOs,
So,
the ones that are ICOs, the ones that are currencies like Litecoin, I think won't be securities.
no, maybe Litecoin won't, but I expect even most of these altcoins, not even the ICOs per se. I think most of them will be regulated as securities as well.
Okay.
I think maybe 2 or 3 or 4 major coins are going to be considered commodities. So I think this really is a privilege that has been given to Bitcoin and a few others that that might happen in the next few months or years. But this securities, these ICOs, they're going to be much easier to clamp down. They have more fragile leadership. The SEC can clamp down harder than can the CFTC on Bitcoin, for example, because I discussed this in my post again. I've got a section on Bitcoin versus altcoins and this anarchy versus monarchy split. So, Satoshi disappeared from Bitcoin after a year and a half, and it's had no recognized leader since. What it has is a highly meritocratic and feudalistic developer community that it's very fractious, and it's not easy to get any kind of consensus or agreement on anything. So Bitcoin is very highly resistant to change and is not easily co-opted or closed down, which cannot really be said of nearly any of the other altcoins. I'd probably accept Litecoin from that. I think Bitcoin and Litecoin are probably the most solid two. But I've written a post on Ethereum where I say, what would Ethereum be without Vitalik? It's the same kind of question if you think about it as what Tesla would be without Elon Musk.
Could be better off.
So I think Vitalik drives Ethereum speculative value, and
yes.
When Vitalik makes a mistake, or God forbid he ever decided to have children and say, I don't want to carry on being
right.
Ethereum's creative vision, the CFTC could bring him up on Ponzi charges and arrest him. They could put him in jail. This is why I find all the other ICOs that they've got slick marketing teams. They've all got centralized developer.
They're just bad IPOs. They're just called ICOs, and
they're going to be relatively easy to shut down.
Yes, but also I think they're going to be relatively easy to bring to market as long as, this is my establishment angle, that as long as they go through the current establishment channels, which includes the SEC registration. You pay your fees, you get a banker, you get a lawyer, you get accountants, you get Silicon Valley backing. I think that's what they want to do. They see $12 billion in ICOs, and they didn't get any of the fees. And they're saying there's a page on the Securities Exchange Commission's website called, I think it's sec.gov/ICO, and it tells you how to bring your ICO to the SEC.
Yeah, I know, but I think these are going to be short-term aberrations, and that most of them are going to turn out to be Ponzi's. And
of course, and they won't bring them to the, because they'll never pass muster if you bring some BS that you're going to advertise on YouTube.
As we've already discussed, we're still, we're back to this tiers law, which states that only historically 1 or 2 currencies are needed.
Right.
So
ICOs aren't currencies though; they're just
I know, but they're trying to basically they're trying to get people to cough up the Bitcoin so they can dump it.
Or the
shitcoins.
Ethereum. You're right.
So it's 95% of if you really wanted to build something of worth, you could build it on top of Bitcoin. You don't need to issue your own coin or ICO or so. Anybody who starts their own ICO is basically trying to get rich quick, I think.
Well, look at that find in Korea. They try to issue a coin to monetize the find of the sunken boat that had treasure in it. That's nonsense.
But that doesn't sound too bad to me. But obviously it's a speculation, isn't it? They could be complete cowboys.
Sunk coin. Well, first of all, they put out the wrong numbers. They said it was $160 billion, and it was 200 tons, and 200 tons is only worth about, I don't know, $7 or $8 billion. So they kind of put a spotlight on their own scamming by saying they had $180 billion, $200 billion worth of gold when they didn't.
Well, I have said in previous posts that I think ICOs can be incredibly powerful in terms of crowdfunding different projects.
Sure.
So that's a perfect example of one. If you want to look,
the SEC agrees with you. They actually say that. They say this could be innovative ways of raising capital.
But you're just highly dependent on this developer team, to be honest, and it'll probably turn out that they're some kind of cowboys or shysters, and they'll probably be taken down by the SEC. But
not if they go through the SEC process. That's the point. That if they decide they're going to register, they're going to disclose.
But the SEC are going to have to actually vet that they have, the papers to die. And
correct. So the way the IPOs work, there is a vetting process where the bankers, lawyers, and accountants actually have to work with the SEC to get the registration statement declared effective, which means the SEC has gone through iterations of disclosure. See, right now you write an 8-page white paper and you send it to some YouTube shiller and he says, buy this coin, everyone buys it. That's not how it works with the SEC. You have to put together a big document and it has to be reviewed and you have to provide information, evidence, financial statements, explanation of what it's supposed to do, all the risks that could happen. They don't do that today. The white paper just basically says, buy this, it's going to change the world. And it ends up being a scam.
So I think that Bitcoin is the most least dodgy, if you understand what I mean.
Clearly.
So it's got cash settled futures set up now. There's talk of ETFs.
Yep.
There's talk of more exchanges. There is development of decentralized exchanges, but I think the next few years, and I've written about it in two posts on Bitcoin Kills Banking, which is it's the fiat money and the banks that have to allow the access into cryptocurrencies. Bitcoin has no monopoly. It's fiat money that has the monopoly. So it's the banks that can create the infrastructure to allow this gargantuan amount of trapped wealth in the fiat system to go into Bitcoin, and it's in their interest because they can get to control and surveil the exchange points.
Correct.
And they can collect the fees on the tolls on the wealth moving from fiat into crypto. But I think that what we're going to see with Tier's law and Gresham's law is the leak of wealth going from fiat into Bitcoin, and this isn't only in the West. This is also going to be in the East.
Well, that makes total sense, and they want to watch that. And that was the one reason they didn't declare the ETF for the Winklevoss twins, because they thought they didn't have that level of view into that transfer.
And how much money have they wasted now? They're a couple of clowns, to be honest with you. Twin dumbasses, as I tweeted at you.
Yes.
They've spent so much years. They had so many bitcoins at the start. If they had have just sat on them all, they would be probably much richer than they are now.
Visions of grandeur through ETF.
Yeah, and this bit license that they've basically bribed themselves to get. They might convince themselves that they're doing it for the good of Bitcoin. But I think the real success, hopefully, in Bitcoin will be the decentralized exchanges, which are growing slowly. But
Correct.
Obviously, if these corporations can build these, slick interfaces and make it much easier, you look at, Coinbase, for example, has made it pretty easy for people to buy Bitcoin. So I still expect these centralized exchanges to proliferate and maybe control things for a while longer. But it's just the trend of the wealth moving from fiat into Bitcoin. So like I've also discussed in past posts, there are two ways really. You can either do what Japan has done, for example, and lightly regulate exchanges and actually give exchanges a way of becoming legal, or you can do what China's done and try to ban. Well, they banned ICOs and they banned centralized exchanges in China, which has driven the trade of Bitcoin in local Bitcoins and over-the-counter trading in China
and overseas.
And it makes local Bitcoins or decentralized exchanges makes it much harder for Chinese authorities to surveil and to tax when the money crosses from fiat into Bitcoin. So this is I've said in past posts that Bitcoin is a deal with the devil. So you can either lightly regulate it and surveil it and tax it, or you can try and ban it and lose all your surveillance and tax capabilities. So it can either kill you quicker or kill you slower.
And I think the killing slower is what they're going for, and I think they have a longer lifespan.
Yeah, and it's going to be very, very interesting, to compare, for example, in the West, the Fed, the Bank of England, and the ECB, and how they all regulate Bitcoin. I've got a sneaking suspicion that the EU is going to try to clamp down on cryptocurrencies more than the other two.
I'd agree with that. All right, Ann. Well, thank you very much for joining me today on the Smaulgld Subscriber Sound Off series. And where can our listeners find you?
I have a Twitter account, so the handle is at ANNRHEFN, and I also have a blog at annrhenf.wordpress.com. So my latest two posts that we were discussing here were the economics of money, credit, capital, and labor, the rise of Bitcoin, the fall of the machines. And I also released a second post on deflation that we didn't get to discuss properly, but that was mostly my fault. So that's Deflation on the Digital Dark Age, Laborism, not Capitalism. And that discusses, after this, the quick discussion we had as deflation relates to capital and labor. So I go on from there to discuss what this means in terms of, state infrastructure and the positions of London, Washington, and Brussels as extractive capitals of the West, and demographics, debt extinguishment, gender roles. I discuss a lot in that deflation post about how deflation changes really the world we live in.
All right, so we're going to put a link to both of those blog posts. So you have, for our listeners, you have homework assignment, read Deflation and the Digital Dark Age, and we'll have Ann back, probably in a couple of months or less, to discuss that blog post. So thank you very much, everyone, for joining in, and thank you, Ann, for joining us today.
Thank you, Lewis. Always a pleasure.
Likewise.